Waste Management Stock, ticker symbol WM. It's one of the first stocks I own in my portfolio, and it's also one of the stocks that is up the most in stock price. The thing I love about this company is their easy to understand business model. On the 26th of April they announced their quarterly results and the stock went up roughly 9% because they beat both EPS and revenue. And during volatile times like the past weeks and probably the coming weeks, companies like Waste Management will be more attractive to a lot of investors because it's a simple and steady stock. But is this stock also a buy based on the current fundamentals? Let's find out. In this video I will show you everything you need to know about Waste Management. I will show you what they do and I will show you my fundamental analysis to see if WM stock is a buy or not. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analysis every week, where I will tell you everything you need to know about the stock market. So, what does Waste Management do? Waste Management is the leading provider of comprehensive waste management environmental services in North America, providing services throughout the United States and Canada. Through its subsidiaries, the company provides collection, transfer, disposal service, and recycling service and resource recovery. It's a leading developer, operator, and owner of landfill gas-to-energy facilities in the United States. The company's customers include residential, commercial, industrial, and municipal customers throughout North America. When we check the revenue breakdown of this company, we see that collection is by far the biggest segment, with a total of 54% revenue share. Landfill is sitting at 90%, transfer at 10%, recycling at 8%, and the other is sitting at 10%. Collection is their main revenue income stream, but recycling is one of the fastest growing segments. When we check the operating revenue by lines of business, in the latest quarterly report, we see that collection segment can be divided into three sub-segments: commercial, industrial, and residential. Commercial is the biggest sub-segment and is up versus 2021. Same story for the industrial and residential sub-segments. That's something I really like to see. The biggest segment is still growing. The other segments, landfill, transfer, recycling, and other, are also up versus 2021, which is a good thing. Especially the growth of recycling is growing in high amounts. This segment could be huge in the future. It's already a hot topic right now, but it's likely to grow in high amounts from this point. The recycling services market size value in 2021 was at 56 billion and will be around 81 billion in 2028, at a compound annual growth rate of 5% per year. When we check the investor presentation, we see that Waste Management has 340 transfer facilities, 255 active solid waste landfills, and more than 10,000 alternative fuel vehicles. They have 144 landfill gas-to-energy facilities, more than 100 of them are electricity focused, 26 direct to industrial customers, and 16 natural gas facilities. So the future of this company is at renewable energy and recycling, which we see here in this sheet, which is something I really like about this company. So now that we know more about this company, it's time to check the historical stock price performance and compare them to the S&P 500 and some competitors, of course. I decided to compare Waste Management to RSG and WCM, both competitors of Waste Management. When we check the 5-year chart, we see that Waste Management is up the most with 126% versus the S&P 500 at just 73%. RSG is up 130% and WCM is also up 125%. So all these stocks did beat the S&P 500 on the 5-year chart. On the 1-year chart, we see that Waste Management is up 20% versus the S&P 500 being nearly flat at a minus 2%. RSG is up 27% and WCM is up 16%. All stocks did beat the S&P 500 again. On the 1-month chart, we see that the S&P 500 is down 10%. Waste Management is up 4%. RSG is nearly flat and so is WCM. So for me, Waste Management is the winner in this case. The next thing to check are the fundamentals, because you don't want to pay a high premium for this company. It's a nice thing that you beat the S&P 500 in the past 5 years, but the most important thing is the future. So let's check the fundamentals of waste management stock to see if it's still a buy or not. Waste Management is a 68 billion market cap company with an enterprise value of 81 billion. The current PE ratio is sitting at 36, which is quite high in my opinion. The forward PE ratio is sitting at 29 and almost at 30, which is also very high. This is something to think about. You've got this steady and easy to understand business trading for a PE ratio higher than Apple, Microsoft, Google and some other fast-growing companies. When we check the historical PE ratio, we see that in 2019 the PE ratio was around 22, which is the fair value in my opinion, between 20 and 25. So right now I do think they are overvalued, so based on the PE ratio I think you pay too much for this company. But again, this is something you have to decide for yourself. Let's continue analyzing the other fundamentals of this company which could justify the higher PE ratio. Operating margin is sitting at 16.5% and profit margin is sitting at 10%. Both are fine in my opinion. You want this number to be at least above 10%, so keep an eye on the profit margin. Return on asset is sitting at 6%, which is too low in my opinion. You want this number also to be above 10%. Return on equity is sitting at almost 25%, which is very good. The 12th trailing month revenue is sitting at almost 80 billion. And the quarterly revenue growth year over year is sitting at 50%, which is really nice. When we check the revenue growth over the past years, we see that it's going up nice and steady since 2016. But in 2020, the revenue went down just a little bit. Since 2021, the revenue is growing again. The decline in 2020 is caused by the lockdown periods, where there was less industrial waste. I think this is nothing to worry about right now, since the revenue is growing again. When we check the balance sheet, we see that total cash is at 180 million. Operating cash flow is sitting at 4.3 billion and leverage-free cash flow is sitting at 2.2 billion. I think this is too low for this type of company. It's really important to have an increase in cash flow because free cash flow is used to pay down debt, buy back shares, do acquisitions, research and development, and of course pay dividends. In this chart we see that free cash flow is growing except for 2020, which is of course related to the Roni virus. So this comforts me a lot. But again, I would love to see a higher free cash flow here, especially if we check the total debt, which is sitting at almost 14 billion. With a total of 4.3 billion, they are capable of paying down roughly 30% of the total debt. I prefer companies that can pay at least 40 to 50% of the total debt with the free cash flow. But since the free cash flow is growing in high amounts, I think this is something to check time to time and not worry right now. As mentioned before, free cash flow is also used to buy back shares, which is something Waste Management does well. They bought back roughly 6%, which is very nice. But to be honest, I would love to see a higher number, around 10%. But since our free cash flow isn't that high, I don't think this is realistic for now. And at least the shares outstanding are decreasing, which is a good thing, because the EPS will go up, which attracts other investors, and of course it's easier to support the dividends, and of course increasing them when shares outstanding are decreasing. When we check the cash dividend paid, we see that this number is increasing. But that's not because of issuing more shares, but because of the increasing dividends every year. And since we're talking about dividends anyway, let's check the dividend scorecard. Right now, Waste Management pays a 1.85 dividend yield and an annual payout of $2.6 a share. The payout ratio is sitting at 46%, which is just a little bit too high in my opinion. I want this number below 40% to be honest, so again, not a thing to worry about right now because free cash flow is growing in high amounts. Right now there's roughly 55% left in cash to pay down debt, buy back shares and all other things. The 5-year compound annual growth rate is sitting at 7.5%, which is fine in my opinion. I would prefer this number above 10%, but in the case of Waste Management, I think it's better to invest the money into paying down debt and buying back shares. Keep the dividends growing at a slow and steady pace. So, all good to me. Waste Management did grow the dividends for 9 years in a row, which is very nice. The last thing I want to show you are the fundamentals of Waste Management versus the competitors. I decided to compare Waste Management to Republic Services, ticker symbol RSG, and Waste Connections, ticker symbol WCM. When we check the PE ratio, we see that all companies have a high PE ratio. So for me, there's no winner here, but it has to be said that Waste Management has the lowest PE ratio. The revenue growth year over year is the highest at Waste Management, but the 5-year compound annual growth rate is the highest at WCM. The net income compound annual growth rate is nearly flat at Waste Management while others are growing, so this is something to keep an eye on. The leveraged free cash flow 3-year compound annual growth rate is growing in a decent amount at WM and RSG. When we check the margins, we see that all companies have similar margins, but Waste Management has the highest return on equity, the highest return on assets, and also the highest return on total capital. So in this case, Waste Management is the winner for me. All companies have a high debt compared to the free cash flow, so this is something to think about. But again, Waste Management has the highest free cash flow growth over the past years. So, if I have to pick one, I would go for Waste Management. The last thing I want to check are the dividends. Waste Management has the highest dividend yield, but also the highest payout ratio. Only WCM has the payout ratio at a healthy level, in my opinion. WCM also has the highest dividend growth compound annual growth rate. Waste Management has the longest consecutive years of dividend growth. If I have to pick one based on the dividends, I think I would go for Waste Management. My final conclusion is that Waste Management is a great company. I love the business model and, of course, the historical stock price performance. I do own this stock for a long time and I'm not planning to sell, but there are some things to think about, such as the high PE ratio and the total amount of debt. I think when this company keeps on focusing buying back shares and growing the business, this could be a buy again in the coming months or years. For now, I think Waste Management is a hold based on what I see. I will keep collecting the dividends, and whenever this stock comes down in stock price, I might do a new analysis to see if it's a buy or not, because I really love this steady company. For now, I will hold it. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.